Hello, everyone. We are live. It's Mitch Goldberg with Client First Strategy. Welcome to my live stream called Be the Boss of Your Money. It's about personal finance, investing, business. It's a pretty big umbrella, so there are a lot of things to cover here. But ultimately, this is about making you your best possible version of your financial self. And if I can help you do that a little bit at a time, every month, every week, every day, then I am one happy camper. So welcome. If you have any questions, please ask away in the comments. I would love to answer your questions. Welcome to you if you're watching in the live stream, and welcome to you if you're watching in the replay. I appreciate you taking the time and your questions. If you're watching in the replay, leave questions as if you are watching in the live stream, because I will be checking for those, and I would love to answer your questions as well. We've got a few things to talk about today, but basically it was kind of a quiet day. No major fireworks, a little bit more good news than bad news in the world of financial markets. People are still trying to figure out why the market is holding up better than the overall economy. I think people forget that the stock market did plunge 33% about 2 months ago, which you covered since then, because the stock market's a forward-looking mechanism and investors are factoring. It's not the stock market. It's actually your fellow investors, your fellow citizens are anticipating a reopening of business globally, which is why you're seeing the stock market hold up a little bit better than many people would expect. There's a couple of reopenings in the economy. I think it's happening faster than expected. I think it's going to actually happen pretty fast. There's also something I want to talk about. I want to talk to you about inflation. I'm hearing this a lot. Why don't we have inflation? With all the stimulus and the monetary stimulus, the fiscal stimulus, Fed's pumping money like mad into the economy. Why don't we have inflation with all this printed money? It's not what you think. It's not quite as much printed money as you might think. We're going to delve into that. I want to make today short and sweet, so I'll roll the introduction. I look over here because that's where I have my control panel. And then I also want to do a little humble brag. I was on TV yesterday, News 12, to talk about why to explain to investors why the market is holding up a little bit better than people would expect. So here's the intro, and then we're going to rock and roll this. There are a couple of things that we need to look at. So first of all, what's going on in terms of the economy opening? I've been pounding on this for about a week now. If you watch this show, Be the Boss of Your Money, that a number of states are opening up, about 15 or so, but the test case is Georgia. Georgia's the heavyweight so far. They have, Atlanta. It's a big state. It's heavily populated. They've got the airport. Now you have Texas joining the fray. I mean, Texas is a really big state, not as big as California, but let me tell you, it's a pretty big state. So as you have more states reopening and unable to hold back, they're coming up with policies and procedures and phases to get different states open. We're learning a lot in terms of what's working, what's not working. Is this helping to spread the virus again? Are we going to have a rebound? So, and then you have something else. You have, I'm going to do a quick share screen because we do this every day, folks. So if you take a look at this, okay, we take a look at this news in the Financial Times. France and Spain to ease coronavirus lockdowns. Listen, this is pretty significant. France and Spain, they want to get back to business too. The whole world has realized shutting down the economy. Look, I've said this from the beginning. the more draconian the measures are in terms of shutting the economy, social distancing, quarantines, the faster we get through it. I think the developed world got to this too late, and there was a lot of pain because of it. When I say pain, unspeakable pain. But once the developed world, Europe and the United States, got the message, same with Korea, same with Japan. I know they're, not quite the Western world, but they are allies. Once countries got the message and took seriously the social distancing, that's when you saw the curves bending. Fewer hospital admissions, fewer people in ICU beds, fewer intubations. We bent the curve. And look, this was never about just COVID-19. This was about having a massive amount of critical cases just about at the same time. That's what this is about. It's not like we have a seasonal COVID-19. It just hits everybody at once. We bent the curve. A lot of precautions were taken. A lot of fear was out there. Okay, listen, I can't tell you for sure. Hey, I'm going to give a couple of shout outs right there. I see some people out there. Andrew, I see you out there too. So that's the big thing. And I think the states want to get this done quickly. I think countries want to get this done quickly. It's not going to happen for everyone, and not every business owner wants to open up right now. And a lot of business owners have to reassess, do they even have a business to go back to? I don't think every single restaurant will be out of business, but I do, look, what's happening now, economic Darwinism. It's a very painful process, survival of the fittest. And you're seeing it in real time now. So a lot of small businesses won't open. Some will. Some will come back better than this. The places that have kept relationships with their customers, that have been able to pivot to get through this time. Last week, I had a number of guests who talked about pivoting. I'm having a guest tomorrow, one of my closest friends, John Greenhut. You may have heard his name on a lot of commercials for power swabs, the teeth whitening formula, and for Plexiderm. You put that under your eyes and it literally makes your wrinkles and your bags go away. So he's going to be my guest tomorrow to talk about what inspires him to come up with new products and how he's managed to pivot his business through all this as well. It's going to be interesting, and I'm looking forward to that. So I hope you will definitely join us. So that's how that's one of the reasons why today was a pretty calm day. We had a decent up day yesterday. So today was another calm day. So let's take a look at a different screen, okay? The watch list. Today, energy was up again today. Energy started negative, went positive. I think it ended a little on the negative side. We'll take a look. The point is energy stocks, the XLE ETF did okay. Industrials, building materials, financials. Those are the stocks that you want leading the market higher. That's a continuation from yesterday. So that speaks to the daily feeling of a V-shaped recovery. Every day we have a different shape, right? Well, yesterday was a V-shape. Today was a little bit of a continuation to the V-shape. But if you see more countries and states, you see more places, more locales opening up for business, I think that continues. And we could start talking about, when do we get back to the new normal? We don't know what the new normal is going to be, but we do know we want to get there as quickly as possible to find out and adjust. So that's what drove stocks today. I still expect some news on remdesivir. That's the Gilead drug. We're supposed to see some news by the end of this month. I mean, that's, 2 more days left in this month after today. And I want to talk to you about something else. I want to talk to you about inflation. I get this a lot. We're laying the groundwork for inflation because of all the money printing, which people have been saying for the last 10 years, more than 10 years, for the last 12 years. Okay, it hasn't happened yet. There's a reason for it, though. It's not just as simple as printing money. So I want to go through I have 7 reasons why we haven't had inflation yet. The first one is there's no velocity of money. Okay, money is not really changing hands like it used to. It hasn't changed hands like it used to for years. Second, people today are hoarding money. People are hoarding money. Corporations are hoarding money. Businesses are hoarding money. So money doesn't become worth something until it's like the grease for the economy. Until you actually use the money, it's not going to help the economy until people spend it. Okay, so people now are hoarding the money. So that's another reason why, if you saw all the money hit the economy all at the same time and everybody just started spending all their money like crazy, that would be a different story. That could be inflationary. You're putting more dollars into the economy. You're sucking up a lot of products, okay? Soaking up a lot of products. The other thing is, unlike the Weimar Republic or Venezuela, countries that just printed money, we do have a ledger that has two sides. The other side of the ledger is bonds. When we print money, we're also issuing an IOU, a bond that gets paid back based on the full faith and credit of the US government. If it wasn't for that, we wouldn't be able to get away with what we're doing, but we could. So we have a bond market. It's not just printing money. So if you have $10 and you have $20, but a gallon of milk was $2, now it's $4. That's inflation? No, it's not really like that because we have the bond market. So there's another side of the ledger, an IOU. The other thing is the United States dollar is the reserve currency of the world. So people all over the world want to hold dollars. So that is another thing. If it wasn't for the reserve currency, if it wasn't for the dollar being the reserve currency, then that would be another issue. Then we have the low price of oil. Oil, energy, that permeates everything. And we have seen oil spikes in the past cause recessions, cause inflation, but you see what's happened to the price of oil. I'm not saying oil can't go up in the future. Now it might go to $30, $40 a barrel, maybe a little bit higher. But there's a ton of it. And whenever there's more demand, we match that with more supply. So there's a ton of oil on the market. It's another reason for low inflation. Then the most important one is technology. There's been nothing has brought down inflation more than technology. So technology is another issue that has destroyed more jobs than anything, including moving manufacturing overseas. Technology is really the cause. I'm not against technology. I'm not what's the correct word, a Luddite? But technology has been a deflationary force since forever, but it's really accelerated with the advance of computer technology, the internet, etc. So that's stuff that that's information you have already. Last thing is overcapacity in everything. We are overstored. There's too many stores. There's too much mining capacity. That's why copper and iron ore and aluminum are so cheap. We have unlimited amounts of capacity for everything. There's too much capacity in auto manufacturing. There's too much capacity virtually in everything, both mined and man-made. Okay, so those are the reasons why you're not seeing inflation. I don't really see anything that could change that. So this is why you see, based on the bond market, nobody sees any inflation going out further than 5 years because of the reasons I just cited. So I'm not particularly worried about inflation. It could happen. So I'm not saying I would bet my life on it, but I have to start somewhere. When you make a hypothesis, when you make, plans for people and you have expectations, you take in high inflation, low inflation, everything in the middle into account. Same with interest rates, but you still need your baseline to start. Okay. So that's just being realistic. I'm not saying put your head in the sand and ignore the possibility of inflation, but I'm telling you why we don't have it now. And I'm telling you why when people say, oh, the Fed's printing all this money, that's why we have to have inflation. It doesn't jive with reality. It's like when you say, oh, the Fed's printing more money, we have to have inflation. Not you specifically. When someone says that, they're leaving out so much. It's not so simple. Okay. Don't be so simple, because it's not. It's not so complicated either, but it's not what you think. So we have the reopening, we have inflation. Okay, I want to talk to you. You notice there's the buckets behind me, red, green, and blue. I sent out a post, more of a clip from an old video I made about my bucket approach to investing assets for uh, pre-retirees and retirees. So let's call it for boomers. Okay, and the clip today that I sent out on social media said, investing for boomers, investing tips for boomers. The idea is I take a three-prong approach for people who are getting to the point when their time horizons are shorter to their financial goals, their obligations. So what this means is, instead of having your whole portfolio in one account, I'll split you up into your assets into three accounts. So you'll have your long-term 20, 15-year time horizon of risk assets like stocks or ETFs, that sort of thing. That's where the risk is, because we have the time horizon for that particular portion of your assets to help you stay ahead of inflation, potentially stay ahead of inflation, and keep your money growing for later years. And then we have an intermediate term portfolio, let's say 5 to 10 years, 5 to 8 years, 4 years to 8 years, that sort of thing. And that's more of a balanced approach, 50-50 stocks, bonds, or 60-40 stocks, bonds, that sort of thing. And then we have a short-term portfolio of lots of cash equivalents, stable investments, some income investments. And that's basically more or less where you keep your money that you expect you'll need for your closer financial obligations. That's not an emergency fund. That would be a completely separate account to me, a bank account. But that is basically what I was talking about. And that's why you see the three buckets behind me with the bucket plan. So it's not a bad way to go. I think it makes investing a lot easier for investors to contemplate ups and downs in the market, and it makes it much easier to accept the big declines in stocks like we've had in the last 2 months or so, which, by the way, as of now, stocks aren't really down so much from their highs and so much this year. This is really just garden variety stuff. So anything else today? The markets were basically flat. I feel like investors maybe are starting to finally get a little spring fever. Yeah, a little spring fever. It was a quiet day today. It really was. We had some fireworks in the morning. The market was up a couple hundred points, but no big deal. Gave it back, but no disasters. And just so you know, what are we looking at tomorrow? Google came out with earnings, and the stock is up about $45, $42 in aftermarket. That's a general for tomorrow that we can look forward to. So just a couple of quick shout outs, and I want to show you my cameo. I was on News 12 yesterday, and I'm going to just say who's out there. Andrew, it's good to see you. Got a couple of viewers out there. Andrew has a question. Let's throw that on the screen. What do you think about businesses reopening in Texas this Friday? Andrew, I think it's a good thing. Now, before somebody says, oh my goodness, just hear me out. Because I speak with people in Texas every single day. There is not a day that goes by that I don't speak with people in Texas. And they're going to Target, they're going to Costco, they're doing their curbside pickup. They're in a lot of ways, they're living their life. And they're not having football games, and they're not having baseball games, just like the rest of the country. They're going to do it in phases as well. They're going to open up May 1st. New York looks like maybe May 15th. Okay. So more or less everybody's in the same ballpark. They didn't get hit as hard with coronavirus as New York did either. So when you hear that, like they're opening, I think people in New York are like, don't you know what can happen? Because we've seen what can happen. I have to tell you, it's pretty horrible of what can happen. But people who have underlying health issues will have to just still self-isolate and social distance. People who go to work will still have to take precautions and do what they have to do to stay safe. If you're in an environment that you have first degree contact with senior citizens or people who are vulnerable to COVID-19 in terms of health problems, you have to avoid them. But I think overall it's good. We have to start getting back to work. and as long as it's done in phases. Yes, there could be a rebound. There could. Does that mean we never try? We never get to it? Well, why don't we wait another month or two? I'll tell you why. Because there's not enough money. And I'm not saying put money and profits before health. We've put health before everything else, and we're still going to put health before everything else. Like I said, phases. So anyway, that's my answer to the question. I hope that helps, and I hope it makes sense to you, Andrew. And I know your situation is a little bit different right now, but you're in Houston, so you're in a pretty big metropolitan area. Hey, Scott, it's good to see you. Thank you so much for joining me here, and I really appreciate that. And for some reason, let me see. I'm going to just go to all activity. We're out here and got a couple of viewers out there in LinkedIn Live. Look, I've always thought that when the weather starts to get nice in the rest of the country, not just the South and Southern California, that my viewership would drop off a bit. I'm going to continue to do these, but I might make them maybe 10 or 15 minutes. Like right now, we're at 22 minutes, and that's about as long as I want to go. Hey, Jonathan, how are you, buddy? It's nice to see you. Thank you very much, Jonathan, for stopping by. I really appreciate that. And I'll just show you real quick my Cameo on. I'll just show you a couple of seconds of it on. Do I even have it in here? I don't even know if I downloaded it. I'll try this. Take a look at this, and don't go away. Just for like 60 seconds.
The stock market is rattled and unemployment is at a record high. So what are the most important things to watch for in the economy during this pandemic? Joining us now with details, Mitchell Gold, president of Client First Strategy. Appreciate your time. So when we look at the unemployment rate and we look at the economy, everything seems to be tanking, but the stock market seems to be gaining some ground. What's the disconnect?
Okay, people have to realize that the stock market is not necessarily a true reflection of the current state of the economy. Because if it was, the stock market would be way, way lower. And that's what people can't quite grasp at the moment. It's almost like, what's with this crazy disconnect? The fact of the matter is, you have a handful of extraordinarily large companies, such as Amazon, such as Microsoft, such as Facebook.
All right, you get the idea. So that's always a treat. I know they mixed up my name. They call me Mitch Gold, not Mitch Goldberg. That's okay. All is forgiven. I'm just happy to have had the opportunity, and it's always good for business to be on TV. So that was always exciting. So I'm going to end this broadcast now. I greatly appreciate everybody who's out there who took the time to watch. I hope this was helpful to you. If you have any questions that you think of after, hit me in the comments, send me a DM, send me an email, send me some smoke signals. I'd love to answer them. If you have a topic that you want me to cover in my live stream, let me know. I'd love to take a deep dive into that and make sure I can help you out. All right, I'm going to end the broadcast. I think we have another comment out there. We have, oh, Jonathan, you're gold. I'm putting that on the screen. Look at that. You're gold to me. Thank you, buddy. You too, right back at you. And I'll talk to you soon, guys. Thanks so much for watching.